are you a believer of technical analysis?
As long as you can encapsulate what you're looking for in objective rules. If you can write down the rules I'm looking for in such a way that somebody else on the other side of the planet not speaking English can replicate it, then yes. If it's some heuristic thing where it looks like a head and shoulder, but if I look at it and slant it this way, it's different, then no, because I can't test it. And ultimately, we have an edge because we can test these patterns. You see, we do believe the markets are repeatable, repeat past patterns. And if I can't quantify these patterns, I can't test them, and then I don't know what edge I have.
Is there any evidence that technical analysis actually works, and does it have an edge over any other kind of analysis?
So if you define technical analysis as looking at shapes in markets, then the question is, can you quantify these shapes? And there's actually a very interesting paper by a guy called Andrew Lowe, who is a phenomenal financial lecturer at MIT, written I think early 2000s, where he does quantify a lot of these structures, head and shoulders, etc., in a very objective way. And at least within the equity markets, he claims that there is an advantage. So the answer should be therefore yes, based upon this. I haven't done the research myself. Now, if you look at technical analysis as not just being shapes that you subjectively recognize, but more as patterns that you look for in the market, then the answer also should be a resounding yes. Why? There is a great hedge fund called Quantitative Investment Management, QIM, which if you look at any of the interviews, bases its trading strategies purely on patterns in the market, and they make a lot of money. So the answer is ultimately yes.
Do you look at charts when you're trading in the Forex market?
Of course, yes.
How does somebody decide what time frame to best use on a chart?
I certainly wouldn't trade 5-minutely, 15-minutely, and the reason for that is because of the bid-ask spread, the cost of trading, but also ask yourself how much does the currency move over that period. So if we know that the average minutely move for Eurodollar is between 1 and 2 pips on a minutely basis, then you can use the square root of time approach. So 15 minutes, the square root of 15 is around about 4. So in 15 minutes, the thing will move 8 pips. 8 pips, so the transaction cost of 1 or 2 pips, that's just like, I wouldn't trade that. So therefore, intra-week, which is certainly what my fund did, to longer term. That's the strategy that is most suitable for me. But then on top of that is also psychology. Some people want immediate gratification, need to have action, and then trying to tell them to wait for several weeks or a month, it's not going to work out.